Well, let's get to our conversations today. Two interesting conversations as always. Now, with inflation showing a consistent downward trajectory for 5 consecutive months, oil production rebounding, foreign reserves strengthening, and gross domestic product growth accelerating, the Monetary Policy Committee opted to slightly ease monetary policy. Specifically, the MPC reduced the monetary policy rate by 50 basis points to 27%, adjusted the standing facilities corridor to plus 250/minus 250 basis points, introduced a 75% cash reserve requirement on non-TSA public sector deposits, and kept the liquidity ratio at 30%. Now, this decision is significant for several reasons. It signals cautious optimism by policymakers who, while satisfied with the macroeconomic improvements, remain wary of latent risk such as excess liquidity in the banking system, lingering fiscal pressures. Moreover, the move underscores the CBN's balancing act, consolidating the disinflationary momentum while cautiously supporting economic recovery in an environment of fragile global and domestic uncertainties. Let's have this conversation. We've been on it for some time, but let's take it to another level. Partner at PwC Nigeria. He leads the tax reporting and strategy at PwC. That's Mr. Kenneth Erikume. He's my guest. He joins me virtually for this conversation. Mr. Erikume, good afternoon. Thank you so much. Well, it's good to wrap the week up with you on the show today.
Hi, Tolu. Thanks for inviting me to the show. As usual, I'm really excited to be here.
Thank you, Mr. Erikume. Well, let's take it a step after the other. I think I should just allow you, it's been a while we had this chart, so I think I'll allow you first react to the present inflation figures that we see, this very notable decline, and it's been a bit consistent. We've also seen a shift with regards to the monetary policy rate. We see that finally the central bank has started to take some steps to ease the pressure around that space as we move towards the end of the year. What do you make of this key economic indicators?
Yeah, fantastic question, Tolu, as always. I believe there was an expectation already that there'll be a significant decline in inflation, particularly because of, one, the base effect, considering that we've had 2 years of sharp inflationary pressure hitting the economy over time. It means that the base from which you're working out the inflation figures is already quite high. So there was an expectation that that would sort of begin to ease out just based on the base effect. The second reason, obviously, is that there's an expectation that with stability post the massive reforms that was undertaken by the government, at some point in time, things will stabilize. But there were risks at the time, which a lot of observers were a bit careful about. And those were largely in relation to our ability to scale up in terms of crude oil production, considering the risks around, getting products down to the terminals and exporting, the security risks, the sabotage of oil and gas infrastructure, and of course, the divestment from the international oil companies from the onshore and shallow water assets. Of course, looking at the reaction from that and the emergency that was declared by the government as well as the NNPC in that regard, that has started to yield fruit. And once you get the crude revenues up without any sharp decline in prices, then that guarantees sufficient forex liquidity. And that's very key, because a lot of the challenges from an inflation perspective is coming from the effect of the exchange rate. So the revenues, getting the revenues up, the FX revenues up was very important, as well as dealing with domestic refining capability. And I know at some point the NNPC tried to intervene in that space. But last year, you know, the Dangote refinery began to get product out into the domestic market. With several conversations happening around the Naira for crude, that obviously gets us to a point where the refinery is able to get product in local currency and then refine and sell product in local currency back to the market. That would then ease pressure in terms of importation, because one of our biggest consumption is in the area of importation of petroleum products. So those two things helps with the FX liquidity and the stabilization of the currency. And we've begun to see decline in the devaluation. We see the Naira strengthening against the dollar. And this is not just the effect of the tariffs and the reaction of the geopolitical and the global markets to all of those uncertainties and a soft weakening of the dollar, but also those measures that have been undertaken from an economic perspective in terms of upping the volumes of crude, as well as the refining in country refining capabilities. And the government is not stopping there. Just a couple of days, well, not a couple of days ago, I think yesterday, we also see that there is some form of protectionist measure being undertaken in that regard to ensure that we continue to preserve that local refining capability by imposing a 15% import duty on PMS and AGO getting into the domestic market through imports, but ensuring that the local refining capability is protected and there is sustainability in terms of some of these measures. So it is no surprise that the inflation rate will then begin to come down in reaction to all of this. Don't forget that the gross foreign reserves keeps going up, and that means that there is sufficient headroom, upwards of 6 to 8 months cover, at $42.4 billion in terms of the gross foreign reserves. And I think every macroeconomic indicator suggests that there is stabilization and things are going in the right trend. And of course, inflation coming down is also in the right trend. Now, the obvious question then is, how does the CBN react to that? And, some of our expectations earlier in the year was what we saw, that they were going to keep monetary policy tightening, at least in the first few quarters. They were going to sustain that and then look at partial easing, but slight easing, towards Q3 and Q4. And, the cut in the MPR, even though it's just by 50 basis points, just reinforces the fact that even from the central bank's perspective, there is that clarity that, the inflation is going in the right direction. I think the big one, which you sort of alluded to, is what then do we do with the risk around, excess, cash in the system, so that some of these trends are not reversed over time. And some of the ratios introduced at the last MPR meeting or maintained at the last MPR meeting suggest that perspective is not lost on the central bank, and they're looking at that very actively. But for me, that's the biggest risk, especially when you're looking at the ambition of the government in relation to infrastructural development and ensuring that the GDP growth trend that we're seeing last year, just close to 2% or 2.1 or thereabouts. This year, we're now 3.13 or thereabouts percent growth. If the government really wants to deal with the quality of life and the prosperity of citizens, then massive investments need to happen. And those massive investments would therefore mean that the government would have to spend more, and then there'll be cash in the system. So there has to be a balance. The government has to do a balancing act, in terms of the tandem between monetary policy and fiscal policy to ensure that, things are simulated, and, while we are going in the right direction, we don't fall back into significant inflation. But, overall, I'm very happy with the trend. And I think there is response from the international market as well. As you can see, in terms of the capital market, the growth in there, some contribution by the Nigerian banks meeting the revised minimum capital requirements set by the central bank. And in 2026, we would continue to see that trajectory, because the next is the insurance companies that have to meet their minimum capitalization under the new act by June 2026. So overall, very positive trend, and not unexpected that the central bank will begin to look at, slight easing of some of the measures to curb inflation.
Well, indeed, Mr. Erikume, you answered my second question already, but let me follow up with the 15% imports, which you talked about, and talking about the protectionist move by the presidency. We've seen some executive orders, also trying to address challenges and address oil and gas industry. So, but looking at this very one, how would you also react to it, considering the fact that we have stability in our currency, steady supply from Dangote Refinery? Many say that is also helping stabilize the currency. And even Alhaji said it himself on Sunday that very soon the dollar might even be lower than what it is, considering, reduction in imports and all of that. So balancing this, what do you make? Do you think that 2 in 1, that's on one side. The other aspect of my question is, do you think that by the next MPC meeting, which is November, or that's from tomorrow, that's first tomorrow, the next meeting, which is November, do you think the central bank will continue to ease, considering external factors?
Yeah, good questions as always, Tolu. On the first one, I think there is a coordinated and very deliberate look into our domestic refining capacity and capability. And rightly so, when there is mobilization of private investment into a sector that is critical for energy security, it is imperative that government, and that's really the role of government, to be honest, government is supposed to intervene and ensure that the market enables those private sector investments. And, I've been on this show once or twice, Tolu, when I am speaking to the fact that government needs to improve in terms of quality of governance and the mobilization and enablement of private sector players. Now, considering the strategic nature of this, of course, the Naira for crude, as well as this new introduction, is going to play a pivotal role to, and it even makes it even more attractive for the current refineries, which are currently not producing as well. An investor could look at that and, considering the opportunity and doing a simulation, whether it is attractive. And even within the NNPC, I know that those considerations would already be going on whether it's attractive to begin to look at those assets and how to ensure that those assets begin to, give the necessary returns to Nigerians, not just to Nigerians, but also to, to investors and shareholders as well. And government is one of the biggest stakeholders in this matter. So it is expected, and, that move, though, very, very, it's just one line, just 15%, the impact could be massive, because it would then mean that, it's a signaling, internally around our ability to mobilize that, domestic capital to ensure that all of those things are running and providing the necessary energy security. So for me, that's key. Now, moving on to the issue of the MPC meeting and what to expect. Like I always say, there's no crystal ball to prophesy and say this is what is going to happen. But the feeling we get is that there is also that concern or observation that the interest rates at the moment is not sufficiently enabling, especially the small and medium enterprises. And that's one of the areas where government really needs to intervene. Because when we're talking about acceleration of real sector productivity, you need to make targeted interventions to support, micro, small, medium enterprises, improve their access to finance, and also fast track, infrastructure delivery. So my expectation, and, do not hold me to this, because
I would.
You can't be very precise, is that, there might still be a slight easing again, which will, signal to the markets that, what we are seeing here is something that's sustainable. But like I said, Tolu, you can't hold me to it, because, these things are not an exact science.
All right, then we'll see how it plays out. Let me just allow you. Thank you so much, Mr. Kenneth Erikume. I know you have a lot to attend to. Just have to squeeze this out for us. Partner, PricewaterhouseCoopers Nigeria, leads the tax reporting and strategy unit at PwC. Thank you so much. Have a great weekend and hope to see you again soon.
Ciao.
All right, then. Well, interesting chat always with Mr.